Tax declaration. In this presentation, we're going to talk about one of the most important documents in Philippine real estate, the tax declaration. Whether you're buying, selling, or simply trying to understand your property better, knowing how a tax declaration works will help you make smarter and more confident decisions. What is a tax declaration? A tax declaration is a document issued by your local government unit's assessor's office. It reflects the assessed value of a property for the purpose of computing real property tax. Understanding the tax declaration is essential because it is one of the primary documents checked whenever a property is sold, transferred, or assessed. What is in a tax declaration? A tax declaration contains several important details about a property. These include the name of the taxpayer, the complete property description, and the exact location. It also indicates the property's classification, whether residential, commercial, or agricultural, along with its market value, assessed value, tax amount, and any improvements. Why you need a tax declaration? There are many reasons why a tax declaration is required. It is needed during the sale of a property, and it is a vital document for due diligence. It is also required when transferring ownership from seller to buyer. Banks request it for loans and appraisals, and it is the basis for real property tax payments. Without a valid and updated tax declaration, many legal and administrative processes cannot move forward. Types of tax declaration. There are two main types of tax declarations. The first is the tax declaration for land, which lists information about the land itself. The second is the tax declaration for improvements, which refers to structures built on the land such as houses, buildings, or townhouses. A complete property will always have both a tax declaration for the land and another for the improvements. Computing for real property tax. Real property tax, or RPT, is computed using the assessed value stated in the tax declaration. Cities typically apply a 2% tax rate, while provinces apply 1%. An additional 1% is added for the Special Education Fund. By multiplying the assessed value by the applicable rates, we arrive at the yearly tax amount. Paying for real property tax. Real property tax is paid at the local treasurer's office and becomes due every January 1st. While quarterly payments are allowed, most LGU provide discounts for early full payments. To ensure smooth processing, property owners should bring the previous year is official receipt, or if that is unavailable, the tax declaration. Keeping all RPT receipts organized is important because they may be required for future transactions, including selling the property. Obtaining an owner's copy of the tax declaration. When a property is transferred to a new owner, the tax declaration must also be updated to reflect the new taxpayer. This is done at the assessor's office. The buyer must submit several documents, including the new title, the notarized deed of sale, the certificate authorizing registration, and updated real property tax receipts. Releasing the owner's copy. After the documents are verified and accepted, the assessor's office will issue a claim stub. This serves as proof that the transfer is being processed. The new owner's copy of the tax declaration is typically released within 6 to 7 working days. If the new owner is unavailable to personally receive the document, a representative may claim it as long as they present a special power of attorney. Obtaining a certified true copy of the tax declaration. A certified true copy, or CTC, of the tax declaration is often required for various transactions, including title transfer, property sale, and loan applications. To request one, you need a photocopy of the owner's copy or the latest RPT receipt, along with the requester's name and valid ID. If a representative is making the request, an SPA is required. In some LGUs, certified true copies may even be released on the same day. Performing due diligence on a tax declaration. Due diligence ensures that the property being bought is legitimate and free from issues. When reviewing a tax declaration, verify that the seller's name matches the deed of sale, the title, and their valid ID. Next, confirm that the property description matches the title and the actual land or improvement. Always check that the seller provides both the owner's copy and a certified true copy to confirm authenticity. Finally, review the real property tax receipts and ensure that the tax number matches the tax declaration and that no unpaid taxes exist. Finally, knowledge is one of the most valuable investments you can make, sometimes even more important than the property itself. The more you understand how real estate works, the better protected and empowered you become as an owner, seller, or buyer. Always remember to invest in yourself, stay curious, and keep learning. Thank you, and feel free to explore more resources like these or post your property at manilaopenhouse.com.